I just want to go how you model recession. You've got a classic economic equation. Is the major partial differential of recession, is it just about the American consumer?
It's really not just about the American consumer, but I think the American consumer is the starting place. And so you're starting from a scenario of strong job growth. We have wage growth that's picked up, kind of all the things that we were hoping to see, we're seeing, and that's feeding through to strong consumption. So you have this kind of very strong bedrock part of the economy, which is the American consumer. And then you have all kinds of downside risk around that. So I think that's what's really difficult.
Is the vector of jobless claims legitimate? I mean, to look at weekly jobless claims, does it really matter if we get a little bit of a uptick there as the worrywarts are worried about?
You know, we'll bounce around a little bit from week to week, and you'll see it moving up sometimes, and we don't get too concerned about that. If we start to see that moving upward in a trend-like fashion, that's when we'll get concerned. But right now, to your point, it's very low. Very low initial jobless claims right now.
What might hit the U.S. consumer that everyone's pointing to right now, Andrew, as being the one strong point in the U.S. economy?
So I think one thing that we're concerned about is the volatility that we've seen both in the economy and in financial markets and globally, is that going to feed through to consumers? And we're actually a bit surprised to see in some of the consumer confidence numbers that have come out recently, those have actually held up pretty well. So maybe we should be a little bit less concerned about how much those things will weaken, but definitely watching confidence very closely here. And again, it's more these kind of external threats that are going to come in and affect the American consumer because that domestic story is pretty strong.
Yeah. And at one point, do you start to change your view and think, where's the trigger where you say, yep, there we go, the external threats have hit the U.S. economy?
So I think if we see some of these more forward-looking indicators that are really weakening in a very material way, so if we were to see, for instance, consumer confidence coming off in a very significant way, if we were to see equity markets, equity prices move significantly lower, that would also be a hit to the consumer and something that we would worry about. Something like ISM services. So we've seen ISM manufacturing. We know that the manufacturing sector is soft. That indicator has been soft. If ISM non-manufacturing starts to soften significantly, we'd get concerned. We're not really seeing those things yet. If we do start seeing them, then we'll start thinking more seriously about recession.